Uh, Thank you, everybody. I am the Chief Investment Officer of DAG Wealth, and we are an SEC-registered RIA and affiliate of DAG. One disclosure from me as well, and we can get right into it, which is that please remember all the content discussed here will be for educational and informational purposes only and should not be considered personal financial advice. And the views expressed are our own and may not reflect the official position of DAG Wealth, and please consult with your qualified financial professional before making any decisions. All right, we hope you enjoyed this episode. So I'll kick off with a quick intro about myself and dive right in. My background of over 18 years has been mostly in traditional finance. On the alpha side, looking at a ton of hedge funds back in 2008 and 9 in the global financial crisis. It was really interesting back then. But I also pivoted to passive or ETF investing at BlackRock and Franklin Templeton, firms of which also have ETFs and crypto by now. Did some multi-asset investing, stocks, bonds, commodities, putting together portfolios of different things for institutional clients and high net worth clients as well. And more recently, before joining DAG Wealth a few months ago, I spent about 5 years at Grayscale. Really proud of all the things we've done there. And here at DAG Wealth, we're very excited to provide and to service our crypto native and curious clients. Of the many, many solutions we have here for crypto natives, this is one that we're really proud of to bring in, which is called the DAG Wealth Systematic Cash to XRP strategy focused on servicing our clients. So once you have figured out as an investor what type of assets you want to own, and that's something you can figure out with your advisor, potentially a financial planning person, such as Tom Teal here. He heads up our financial planning practice. He had a webinar last week. Feel free to look at that on YouTube. Um, you have an asset allocation set, whether you have traditional investments or not. You have crypto currencies. Let's say you have a concentration potentially in one or a few assets. The question then becomes, how and when do you invest? And this is one of those hardest questions because the timing of when to invest in an asset is very hard emotionally. Some people like to wait for better prices. When prices drop, they get excited to buy. But more often than not, it's the opposite, where people are emotional and they chase things when things go up. They want to buy more. Some people like to go all in at once. And sometimes that works, sometimes that doesn't. So rather than reacting to headlines, the way we figured out that's best to solve this problem for our clients is a more disciplined and repeatable process in a systematic fashion. So again, what does that look like? Instead of you as a human being or even ourselves, people with professional experience, instead of us timing the market with you, and maybe that's something you do with your advisor, whether that's here at DAG Wealth or not, this is way to remove decision making on the human aspect without those emotions and leave it to the algorithms. We want to think of this as cruise control, really, for your XRP position, where we set that strategy at DAG Wealth, and this whole system does the steering for you. Now, onto the exact offering here. This is something that's built on a partnership with Arch Public. And Arch Public is an algorithm builder. Think of them as a company that comes out with ingredients, to use a food analogy. They have a bunch of ingredients, algos. We at DAG Wealth fine-tune them or cook up these ingredients in a recipe to deliver that to our clients. On the right, you kind of see the chart of XRP for the last 3 years or so. This is a one-day chart. And this is just an example of what this strategy could look like. So this systematic strategy, it utilizes their Arch Public's newest algorithm called Market Wave. And as the visual suggests, you can see here, this market wave in red and green shows you this wave where no trades can happen. So unless you had this, you may be pretty excited when you see green candles you might want to buy. But this strategy actually does the opposite. So you'll see these blue arrows pointing up, where when it's below the wave, it buys, and when it's above the wave, it fires off sells. Obviously, it's not as simple as that. There are many indicators that are proprietary to Arch Public in this market wave algorithm that makes up the wave. And there are other settings that DAG Wealth here, we fine-tune this specifically for the XRP asset for this to work. Things like scope, things like filters, and stacking different time frames to come up with a strategy. Again, this picture is just to show you an illustration of one of those settings in a one-day chart. So in the next few slides, I'll go and show you some of the back tests to give you guys a sense of what the performance of this was in the past. But note that past performance is not indicative of future results, and it's shown here for informational purposes only. But for all of our 27 scenarios that we're showing, we're starting with $1 million for each, and we're ending the 1, 3, or 5 years with a mix of cash and XRP. And we'll call that the kind of the market value that's ending. And we'll count up how much cash you have and XRP you have, and convert that all to dollars and say, hey, did you start with $1 million and end up with 2 or less or more? Out of the 27 backtest scenarios, most of them, 24 of them, did better or beat buy and hold. So as an investor, if you just buy and held the entire time with $1 million and did nothing, that's what we call the buy and hold strategy. But with our strategy, net of fees, we found that most of the time, if you held this strategy long enough for 1, 2, 3, 5 years, it tends to do better. And the worst of the 27 scenarios is highlighted in the top right box here. If you started with $1 million in 2021, beginning of the year, you ended the year with this strategy with 3 million. So that performance was about a 200% or tripling of your money. And the buy and hold actually did better. So that was the worst scenario. And I'm going to go through a couple of different ones to show that. There are a lot of numbers here, but I'll just kind of read off 2 or 3 of these just to make sure people understand this. The first row here shows a 3-year holding period from mid 2022 to mid 2025. You started off with $1 million, and this is actually the best strategy, but the best time period or scenario, but you ended up with almost 7.9 million. And that was a mix of cash of 40% and XRP of 60%. So this strategy is not just to DCA or buy only, but rather it's optimized for a total return. Meaning if you come up with $1 million, we help you enter and exit the asset at opportune times. So in these 3 years, you ended up with from 1 million to about 7.9 million. So the return was about 730%, the PORT or portfolio, versus if you had bought and held, buy and hold, it wasn't bad at 446%. But the outperformance of our strategy, the port minus B and H column, was 285% here, net of fees. And if we annualize this in the dark bolded column, port minus B and H here annualized, this tells you on average, on an annual basis, how did this strategy do better than buy and hold? In this case, almost 100% or 95%. And obviously, the max drawdown here within the strategy, we all know XRP, the asset is volatile. So even with the strategy, you will experience in dollar terms drawdowns throughout the 3 years. There obviously are other scenarios, especially let's say the Trump pump scenario, 3/4 of the way down. If you had just a very short time period where you see those big green candles come about, that you will underperform most likely buy and hold, but that's not by much. So we were able to, instead of a doubling of your money with the buy and hold in 2 months, if you had this strategy, you would have been up 87%. So you would have lagged by only 16%. So again, of the 27 scenarios here, 1, 3, 5 years, most of them have done better. Now, no strategy is perfect. And again, this is just for informational purposes only for your comparison. This is just another way to show it, maybe a little bit easier to read. That first row I rattled off there was on the left here now. Again, it's telling you if you invested $1 million in mid 2022 and stopped in mid 2025, you would have ended up with almost 8 million with the strategy, and buy and hold would have been about 5.5. So for longer time frames, like I said, in the stone colors here, you tended to do better with the strategy than to go all in. Here's another way to show it. The left is just the strategy versus buy and hold for the entire period, and the right just is annualizing them for that. So the first row, 2021, that was actually the worst for this strategy, this scenario. You would have lagged buy and hold by 58%. And the left side and the right side look the same because they're both 1-year periods. But if you go to the bottom, for the last 5 years or so, for the entire period of 5 years, you would have outperformed buy and hold by 430%, but an average of 86% on the right. So how does this all come together? So this DAG wealth systematic cash to XRP strategy is delivered again with Arch Public's algorithms. And DAG Wealth, we fine-tune them to deliver this to clients in SMA format, and this is with custody at Anchorage. It's called a qualified independent custody. So you do not have to worry about your keys, and this is something that's professionally managed with institutional quality custody as well as trading fees. All of this is just done systematically, and it's a simple sign up without advisory. And this whole thing, this whole strategy actually comes with your advisory fees at DAG So it's a really cool offering here. In summary, the DAG systematic cash to XRP strategy is a disciplined and rules-based approach to optimize your total return on XRP versus buy and hold. It removes all the guesswork, all the emotion of timing the market with this asset, and it's fine-tuned by us and overseen and professionally managed by us and Anchorage. If you'd like to learn more, please contact your advisor, your client here, or reach out to wealthsupport@dag.com. Thank you, and we will open it up for questions if there are any.
Yeah, thanks, Lewis. We do have a question here about whether or not this deck will be available for those people that are in attendance. How can they get their hands on this information?
Great question. Yes, I would definitely reach out to wealthsupport@dag.com, and we can get that over to certain people once we're through compliance.
Yeah, that sounds good. And you can always reach out to your advisor as well if you've got questions and would like to see more of this data. We're happy to share this. One question that I had, Lewis, can you talk a little bit about what this means from a tax perspective and how you would think about the tax implications of a strategy like this?
It's a great question, Erin. As some of our clients do know that we have partnered with Arch Public before this strategy on the in-kind side, where you would in-kind over your XRP for retirement accounts only. This is a newer one that we're launching in early August that is just a cash deployment strategy. And this is available in taxable accounts. So there may be tax implications. On the outset, right now, the way we fine-tune the strategy is to optimize for total return, meaning we will maximize your total return as much as possible over the long run. So at the moment, it doesn't really consider taxes, and that's something we are working on for the next iteration.
Makes sense. How is this different than the the Arch Public strategy that we currently have available in the retirement accounts?
Yes, the current ones, again, are in kind. So the way those get in and so are subscribed are taking XRP assets, in kinding for retirement accounts. Whereas this one starts with cash, and you can do this in a taxable account or a tax deferred, tax exempt account as well. So both. And also the underlying algorithm is different. While we partner with Arch Public for both of these, this cash one has a newer market wave technology and algorithm versus the older one, the in-kind, that uses another arbitrage strategy.
That's great. Somebody asked, can the strategy be used in my IRA at DAG Wealth, which I just converted to a Roth IRA?
Yes, it can. That's right. This one is more flexible in both retirement accounts as well as taxable accounts.
That's great. What if, I mean, this is clearly targeted towards XRP, but what if I was interested in something like this for a different asset, for Bitcoin or Ethereum or HBAR or something like that?
Yeah.
Is that something we're talking about?
Great question, Erin. Yes, that's something we're looking to and we're fine-tuning as we speak. Whether or not it is the market wave, we will pick the best, again, ingredients, the algorithms from Arch Public and our partnership with them to fine-tune it for other assets like Bitcoin, Ethereum, Solana, even potentially Hyperliquid and others. That more to come there, but we're very excited about this.
That's great. Any other questions from, don't see any other questions here. Somebody asked if you already have XRP available, this is just for buying more XRP. Is that accurate, Lewis?
So if you already have XRP, you can, in a retirement account, use the in-kind strategy that we've already had for a few months. This strategy is to have cash to deploy into. So you can choose to do the cash in a taxable or retirement account, or you can choose to do the in-kind in just the retirement accounts.
All right. If you guys have any other questions, keep them coming. But other than that, We do have another question that just came in. Why would the algorithm be different for the cash strategy as opposed to the in-kind strategy?
Someone is really paying attention today.
Yeah.
This is a great question. I love that. So the in-kind strategy was launched a few months back before my time, and that uses the arbitrage algorithm that Arch Public has. That one was one of their original algorithms. The newer market wave that this cash strategy uses just, I believe, came out in April or May, and it took a bunch of testing and fine tuning, like I said. We actually looked at over 10,000 different backtests and scenarios and all that. There's a lot of things that gone into it to making this. But yeah, that's something for the in-kind side we're looking at. Where would we potentially apply market wave or other things to improve upon the in-kind strategy? So that's what I'll say there. It's not like one is definitely always better than the other, but we're continuously looking at what the potential best outcome is for all types of strategies that we have.
That's great. Somebody asked if this method work for the Roth IRAs too, which the answer is yes. You can use this in you can deploy this strategy in a Roth IRA in any of our retirement accounts or in a taxable account. It works across all account types. Somebody asked, is this for accredited investors?
Yes, it is.
Is it for non-accredited investors? Is this available to everybody? I guess is a better
It
way of
is.
asking.
So the minimum for the cash strategy here is 1,000. So it's a we've decided to lower the barriers of entry to make it as easily accessible as it can be. So once you sign up on the DAG Wealth side, you can so choose to then sign up for this strategy. Again, this comes with the advisory fee. It's no extra cost to investors.
That's great. And you said the minimum investment is $1,000.
It's $1,000 for this strategy, correct?
That's great. Somebody asked that. How does this compare with the current growth fund? Can you compare those two strategies?
Sure, yeah. The current growth fund is a very different vehicle. Think of that as almost like a hedge fund vehicle, if you will. It's a fund, it's commingled, right? And your asset XRP is going to act as collateral for that one. So it will have to move out of Anchorage, right? The baseline for us with any clients that sign up with us, even if you don't use this strategy, is qualified custody with Anchorage. And you can trade there with us. You can call your advisors to place trades on XRP or other assets. If you sign up for the growth funds, it does move out of Anchorage. So that's a different structure. And we can only talk about that for qualified clients there. But for this particular one, this will stay in Anchorage and it's much more visible, if you will, to you day to day.
Like that. I've got a couple people asking really good question about lockup periods and liquidity. How often can you enter and exit, this strategy, and like how does liquidity work?
Great question. So the liquidity of this is an initial 3-month lockup, but after that, it's monthly subscriptions and redemptions. So we'll always start at the top of the month. Our first inaugural cohort would be this August 1st, or probably the third on the Monday, I think. So yeah, 3-month lockup, monthly subscription redemptions, notices by the 20th calendar day. So if you want to get in, let's say September 1st or that cohort, the notice would be by August 20th, for example.
Great. Somebody asked if this is available to non-US citizens or residents.
That's a great question. I honestly do not have the answer for you here. Happy to come back to that question. If that person wants to email wealthsupport@dag.com, I'm sure we can get that answered.
Yeah, that'd be great. Great. Well, that just about takes us to time. It looks like we've answered the questions here. Thanks, Lewis, for running us through this strategy. Like I said, I'm really excited. We've got some really exciting products that are coming out, over the next quarter. So, Lewis will be back, I am sure, many, many times between now and the end of the year with lots more exciting things to talk about. But thanks, everybody. We'll end it here.
Pleasure to be here. Thank you, Erin, and thank you everyone who's joining. More to come.
Great.